All right, folks, so Toronto GTA condo market crash. Most people are asking when. Well, guys, you have been watching it unfold in front of your eyes for months now, even years. So we'll get into some data. Let's crunch some number. Well, first, 78 months of inventory. Then we have 20,000 units. Developers are walking out, they're walking away, they're being bankrupt all over the place. And now you're asking, when is the crash actually coming? Well, crash is coming different to different people based on their finances, based on their income, based on their situation. But this is not something where somebody will shut off the lights and there you go, we know now it's the crash, right? It is a slow ride until it gets off the cliff, and then it's a free fall. So let's get into some data and some numbers proving once again that we're definitely in a collapse. This is a condo collapse, right? That can actually push definitely other segments of real estate. And yes, some are saying, well, you know what? Toronto real estate is very strong, and I can see that, right? Like it's a central hub. I understand that. However, there's still pressure, right? So people are not selling like what they were selling or anticipating what they would sell at the peak, right? Think about that for a second, right? So we have even some of those sales feathering down by 10%, maybe 20%. It all depends on the area and it depends on the actual situation. But looking at that condo is under immense pressure because most of the folks were actually borrowing against their current homes, right? And putting those deposits into pre-construction, right? Why? Because they had time to figure it out, right? Like they were thinking, they were planning, and they were assuming, right? So assumptions sometimes can lead to a disaster because you anticipate, you assume that that particular price will be X by the time you get the keys, but it could turn the other way around, and it happened for thousands of people. So let's get into some numbers. All right, so let's get into some oversupply and inventory. 23,918 unit condos, record high unsold. Balanced market is somewhere between 10 to 12 months. In a decent market, I would say from personal experience, this is somewhere around 6 months. But then you have now GTA sitting or around 78 months, right? And it keeps climbing, and that rate of climb percentages, like we don't even know, right? Like we can assume and anticipate, but it keeps piling up. So it's a quantum pile up, let's call it that. I don't even know if this is a word, but people that haven't sold last year, they're back on the market, right? People that haven't sold in the assuming markets like the spring or fall, they're back, right? So people that got the keys now, well, they're adding to that equation, right? So everybody keeps adding themselves to a equation, right? Now, 2,000 completed units already empty, with 31,000 more coming in 2025. So you're driving with your family, by yourself, you're walking, taking a subway, and seeing all these cranes, seeing all these condos being developed, and you're asking yourself, well, nothing is wrong, right? Because it is simple. Look, everybody is building and everybody is buying. So, right? So you are assuming that everything is fine. Well, in order to decipher all of that, you have to understand that all of these units were bought years ago. So that's something that you have to take into consideration. That's a huge solution to our problem, right? Because at that time, the market was different. And we're usually talking 3, 5, 7 years ago, right? When these pre-construction condos were sold, whether they were sold online, whether they were sold in a showroom or whatever, right? But they were sold, right? So today, it's a different story in the market generally. So collapsing sales. Sales are down 88%. That's below the 10-year average. So if we go back, 10 years, it will hit 2015, right? So it's way below, right? Like, so one of the big falls we have seen, 2016, 17, and 18, when they changed, when the government implemented the HST tax for foreign investors and stuff like that, and then the market kind of shrunk and imploded a little bit. So that was a big, like we could see it on the graph. However, it got picked up, machines were on, everybody started printing, and we know the rest, right? Like all the way until the pandemic, we kind of survived the market. And then exactly there on the pandemic, we know the machines got turned even harder. Everything was rigged basically to the best possible outcome for everyone. And it was in favor of real estate market especially, and obviously people took that opportunity. Anyways, they were thinking it was an opportunity, so they took it, and that's where we are right now. And that's why we're seeing these numbers what we're seeing, and they're catastrophic, my friends. So lowest new condo sales in 30 years. So let's think this in for a second. So if we go back 30 years, so it will bring us to 1995. And we know that the collapse happened in the early 90s in Canada, and we've seen all kinds of stuff, and people that went through it, I mean, they're commenting, and I want to thank you guys, and they're commenting, they're giving examples, they're giving their life stories on a platter, like just for all of us to actually see it and kind of feel it and kind of try to mimic or try to see the situation that we're currently in, because it is shockingly similar to today, right? So it is just nuts, right? So it brings us to 1995. The 30-year going back literally brings us to 1995, which was probably the midst of that crash in the early 90s, right? Some say that the 1990s, the recovery took 10 years. So it went the collapse, then we went to the midst of the lowest point of that particular crash, and then by the time it came back, it took another 5. So 5 till the bottom, 5 to the up. So a circling of 10 years of recovery. And we know by the graphs that since the early 2000s in Canada, we have seen 2 decades of extremely strong real estate that basically could not fail, and it almost felt like it was bulletproof. But guys, Canadian real estate market is not a bulletproof formula. It has cracks like everything else, right? So let's move on. Whatever sells now happening in resale at discounted prices. Yes, so this is very true. So if you want to sell, either you bite that silver bullet or you just keep riding it. I've saying this for years now. The recovery by mathematical equation, it'll take you 5 to 10 years just to break even. So depending on the actual deficit or loss, but we're talking hundreds of thousands of dollars and years to recoup that money back, having a tenant, going through all these headaches and whatnot, right? Because if you have been going through some troubles or some situations with a tenant, you know exactly what I'm talking about. And if there are people out there, please comment below, because it's not that easy. Like nowadays, it's like, oh my gosh, like it's crazy, right? So investors trapped. Pre-construction buyers at 2001 and 2002, which was the peak, are 10 to 30% underwater. Yes, that is true, because like it depends obviously on the location, on the project, and when it was purchased. But overall, this is just the actual number, right? It's usually higher because people are calculating, hey, look, if I bought it at $1 million and I'm selling it at 800,000, there's a loss of $200,000, which is 20%. Yes, this is simple math. But then in order for you to take the keys, there's maybe HST involved. There may be, not maybe, for sure, land transfer tax, lawyers, all of that stuff. Then when you're selling, there are commission splits and buyer commission, seller commission, everything, carrying costs that you have to do it, taxes that you have to pay. Maybe even, not maybe, like most cases, the occupancy period that is very, very expensive, that people don't take that into consideration. But in the actual books, that has to be also kind of calculated, right? So that 10 to 30%, in most cases, it's much, much, much higher. Appraisals far below purchase price, many forced to walk away from deposits. Yes, it is happening more than you think, and that segment of tragedy, right? Because most people, they barely got their hands to have some equity on a piece of property that they owned maybe for years, and now they're being literally wiped out. That's it. Like, it's very fast, right? So to recoup it from a builder or a developer, it's mission impossible, because they will not just refund you money, right? Because they're also underwater and they're trying to figure that stuff out themselves. So that's another big issue, right? So they will go after you, they will go after your deposit. And most people ask me, okay, so fine, if I lose my deposit of 20%, is that it? In most cases, it is not it, because if a property is valued less on market than 20%, yes, they will take that deposit gladly, but then also they will go after the excess money, which could be the appraisal came in too low and all of that stuff. So you might, in most cases, lose your deposit. On top of that, you will still have to pay them that difference, right? So it's just something to think about. But 100% talk to your lawyers, talk to whoever is guiding you through a process, because that's the best way. Every contract agreement has its own little holes and gray areas and white areas, whatever, right? So definitely talk to somebody about that. All right, carrying costs at today's rates, cash flow negative. So this is a given, 100%, right? 100%. You will not be able to ride that particular property and be positive cash flow, not with 20% down. I don't think even with 30% down, you can have that particular cash flow, right? And most people would argue, but they would say, hey, look, like, even if I have that, right, it doesn't make sense, right? Because the return on an investment is so minimal or so low that it doesn't even make sense, right? So it is like, it's a crazy story overall. All right, so the causes. So what's causing it? High interest rates, mortgage unaffordability, and projects going under and stuff like that. All these circumstances are adding to the fire. And we know that at least here in Canada, they did hold on interest rate drops a few times now, right? Most people were anticipating it and assuming. Remember the word assuming, right? Like, you so assume, and then you kind of put that trajectory on your assumption, but then if it doesn't happen, you're off on that trajectory. Very, very dangerous. All right, so what's the outlook for at least 2025? It is hard to predict nowadays. I have to be honest with you. Like it is extremely hard, and people that can predict, 5 years out or 10 years out, they're full of, you know what I mean? Like, you can't. Like, it's just, you can't. Like, because it seems like every weekend something new and something more difficult or more different is hitting you that you don't know. But I believe that there's going to be definitely more pain in 2025. There's definitely going to be more and more of supply which will translate simply into more competition, more pain, more price cuts, more chaos just overall. And don't kid yourself, like, you know what I mean? Like, people say, like, look, if I'm a seller, I don't have to sell. I don't care. Well, good for you. But do you know how many people out there need to sell? Like, yes, they're playing the game because they have to, or they think it's the right thing to do, and good for them, right? Like, to each his own. But think about it for a second. If someone in that particular tower, unit, complex, or even your neighborhood sells at a discount, what you might call a discount, but it is not a discount, it is a current market value, then like, look, like, that's what your unit is worth. And you can look at it and you can laugh at it, but that's what you're selling it for next. Like, that's it, right? Like, very simple. Experts say recovery may start in 2026 and 2027. A linear market, less speculation. Yes, I can see that maybe in 12 to 24 months we might be able to see a more flat market where everybody lost whatever they could lose, and whoever can hold on will hold on, and that's the next set, right? So the stage will be set at that particular market price. However, we don't know what else will come out, right? Like we have seen that the market has started the recovery the late 2024, early 2025, and then we got hit by tariffs, right? And that changed the dynamics again. So we don't know within 24 months what it will look like at the end of the day. So what I would suggest, you should plan, and maybe you should have a trajectory on your own, and your own plan what this looks like, and then go from there. If it makes sense for you to hold it, hold it. If it doesn't, try to get rid of it. Try to get rid of your weights as fast as possible, because I personally don't think that there's going to be a solution by 2026. I highly doubt it. 2027, we might see that flattening of the market. 2028, 9, maybe 2030, that we see, okay, so somewhat of a healthier atmosphere. And by 2030, okay, so now let's get back into it. However, I think by 2030, the world will look completely different, right? I'm not saying things are going to look different, like this is still going to be a post, but I think how we work and how we do business and how the business is done overall will change itself. And I've talked about that in my other videos, how AI will change realtors, right? And how I believe that will do business and banking and all of that stuff, right? So it's worth watching that video for sure. I'll pin it at the end of this video. But anyways, I hope you gain some true value. Please comment below, please like, please share to somebody that you might think would see value watching this video, and I'll see you in the next one.